Dividend stocks are a fantastic way to generate passive income, but most pay quarterly or annually. Monthly dividend stocks, they're a game changer for investors who want consistent cash flow to cover expenses or reinvest for faster compounding. Today, I'm sharing 3 top monthly dividend stocks for 2025, focusing on companies with strong fundamentals, sustainable payouts, and attractive yields. We'll cover what each company does, their dividend history, financial health, and risks to watch out for. Whether you're a retiree, a beginner investor, or just looking to diversify your portfolio, this video is for you. Before we dive in, a quick disclaimer: I'm not a financial advisor, and this video is for educational purposes only. Always do your own research or consult a professional before investing. Our first stock is a fan favorite among dividend investors, Realty Income, proudly known as the monthly dividend company. This real estate investment trust, or REIT, has been a cornerstone for income seekers, and for good reason. Realty Income owns over 15,000 commercial properties across the US, Europe, and beyond, leasing them to top-tier tenants like Walmart, Dollar General, and CVS. These are net leases, meaning tenants cover expenses like taxes, maintenance, and insurance, giving Realty Income predictable rental income. Their portfolio spans retail, industrial, gaming, and even data centers, making it highly diversified. Dividend details. As of August 2025, Realty Income pays a monthly dividend of $0.2685 per share, which annualizes to $3.222. At a recent share price of around $55, that gives you a dividend yield of about 5.8%, well above the S&P 500's average yield of 1.2%. Even better, Realty Income has increased its dividend 131 times since going public in 1994, including for the last 111 consecutive quarters. That's over 30 years of raises, earning it a spot in the S&P 500 Dividend Aristocrats Index. Their dividend growth rate averages 4.3% annually, outpacing inflation. Financial health. Realty Income's financials are rock solid. They maintain a conservative payout ratio of around 75% of their adjusted funds from operations, or FFO, which is a key metric for REITs. This means they're not overextending themselves to pay dividends. Their balance sheet is strong with an investment-grade credit rating, and they have a robust acquisition pipeline. In 2024, they raised their investment volume guidance to $3.5 billion, signaling confidence in future growth. Why it's great for monthly income. The combination of a high yield, consistent dividend increases, and stable cash flows from creditworthy tenants makes Realty Income a no-brainer for income-focused investors. Whether you're covering monthly bills or reinvesting, that 5.8% yield delivers reliable cash flow. Risks to consider. No stock is perfect. Realty Income is sensitive to interest rate changes, as higher rates can increase borrowing costs for REITs and make bonds more attractive to income investors. Also, while their tenant base is strong, a severe economic downturn could impact retail-focused tenants. However, their diversification and conservative financials mitigate these risks. Who it's for. Realty Income is ideal for conservative investors seeking dependable monthly income with modest growth. If you're building a retirement portfolio or want a low-maintenance dividend stock, this is a top pick. With a yield of nearly 6% and a track record of over 650 consecutive monthly payments, Realty Income is a cornerstone for any dividend portfolio. Let's move on to our next stock. Next up is Main Street Capital, a business development company, or BDC, that's a standout for monthly dividend seekers. Main Street Capital provides debt and equity financing to middle-market companies, businesses too big for bank loans but not yet ready for an IPO. Their portfolio includes over 150 companies across various industries, with no single investment exceeding 5% of their income, ensuring diversification. They generate revenue through interest payments and dividends from these investments. Dividend details. Main Street pays a monthly dividend of $0.245 per share, annualizing to $2.94, with a yield of around 6.6% at a recent price of $44.50. What makes Main Street unique is its policy of setting a sustainable monthly dividend and occasionally paying supplemental quarterly dividends when profits allow. Since going public in 2007, Main Street has never cut its regular monthly dividend, even through 2 recessions, and has increased it by 132% cumulatively. Financial health. Main Street's financial discipline is impressive. They maintain an investment-grade credit rating and set their dividend below expected income to ensure sustainability. Their payout ratio is conservative, leaving room for reinvestment and growth. The company's diversified portfolio reduces risk, as no single industry accounts for more than 10% of their income. Why it's great for monthly income. Main Street's high yield and flawless dividend history make it a compelling choice for income investors. The supplemental dividends are a bonus, adding extra income during strong quarters. For example, a $100 investment would generate about 55 cents monthly or $6.60 annually, not including supplemental payouts. Risks to consider. BDCs like Main Street are exposed to economic cycles. A recession could impact the ability of their portfolio companies to repay loans, potentially affecting income. However, their diversification and conservative management reduce this risk compared to other BDCs. Additionally, their stock price can be volatile during market downturns. Who it's for. Main Street Capital is perfect for investors with a moderate risk tolerance who want a high-yield monthly dividend with potential for supplemental payouts. It's a great fit for those looking to blend income with some growth potential. Main Street Capital's 6.6% yield and rock-solid dividend history make it a powerhouse for monthly income. Let's check out our third stock. Our third pick is EPR Properties, another REIT with a unique focus on experiential real estate. EPR invests in properties like movie theaters, amusement parks, ski resorts, and fitness centers. Think eat and play venues that prioritize experiences over traditional retail. They use long-term, triple-net leases, where tenants cover all operating costs, ensuring stable rental income. Dividend details. EPR pays a monthly dividend of $0.285 per share, annualizing to $3.42, with a yield of about 6.7% at a recent price of $51. Before the pandemic, EPR was a consistent dividend payer and raiser, but they eliminated their dividend in 2020 when tenants faced closures. They reinstated it in 2021 and have raised it annually since, showing resilience. Financial health. EPR's portfolio generates predictable cash flow thanks to their triple-net lease structure. They aim to invest $200 to $300 million annually in acquisitions and redevelopments, fueling future growth. Their balance sheet is solid, with enough capacity to fund new investments without over-leveraging. The payout ratio is reasonable, leaving room for dividend growth. Why it's great for monthly income. EPR's 6.7% yield is one of the highest among our picks, making it a strong choice for income-focused investors. A $100 investment would yield about 56 cents monthly or $6.70 annually. Their focus on experiential properties taps into growing consumer demand for unique activities, supporting long-term stability. Risks to consider. EPR's experiential focus makes it sensitive to economic downturns, as discretionary spending can drop during recessions. The 2020 dividend cut is a reminder of this risk. However, their recovery and diversified tenant base reduce concerns, and their current financial health is strong. Who it's for. EPR is ideal for investors seeking high yields and willing to accept some economic sensitivity. It's great for those who believe in the long-term growth of experiential real estate. EPR Properties offers a juicy 6.7% yield and a unique angle on real estate. There you have it. 3 fantastic monthly dividend stocks for 2025. Realty Income, Main Street Capital, and EPR Properties. These stocks offer yields between 5.5% and 6.7%, with strong fundamentals and reliable monthly payouts. Whether you're covering bills, reinvesting dividends, or building a retirement portfolio, these picks can help you achieve your goals. Here's a quick recap. Realty Income, 5.8% yield, unmatched dividend growth, and a diversified portfolio. Main Street Capital, 6.6% yield with supplemental dividends and a flawless track record. EPR Properties, 6.7% yield with a unique experiential focus. Again, before investing, consider your risk tolerance and do your own research. High yields can come with risks, so diversify and consult a financial advisor if needed. That's all from our side. Thanks for watching, and I'll see you in the next one.